debtors turnover ratio is also termed as trade receivables. Trade receivables turnover ratio. Okay, the formula for the same is net credit sales. This is the area where you need to focus, because you have to understand that ki like debtors are there with us because of credit sales only. Correct? So net credit sales, yeah, for net credit revenue from operations to be divided by average trade receivables. Now when you talk about average trade receivables will include the debtors and bills receivable, both the terms, right? Average के लिए the formula is very simple, that is opening plus closing to be divided by 2. Now net credit sales, net credit sales के लिए भी आपको ध्यान देना होगा, out of total sales return is by default to be deducted, as well as cash sales also. Next is about the average trade receivables. Trade receivables की बात करते हैं तो debtors and bill receivable, both the balances will be included. Okay, so the formula for average remains same, that is opening plus closing to be divided by 2. The formula remains same, but trade receivables तो only debtors का काम नहीं चलेगा. अगर क्वेश्चन में like if there is any information related to debtors and bill receivable, both the amounts are given to us, we need to take both the amounts. Next, what is a note? Yes, if only closing balances are given, so in that case we will calculate debtors turnover ratio with the help of closing balance only. ठीक है? Second, if credit sales, okay, that is net credit revenue from operation is not available, okay, please take care of this. अगर available है ही नहीं, we are just given the revenue from operations, that's all. तो उसमें से cash कितना है, credit कितना है, कुछ नहीं है. So in that case, whatever the revenue from operation is given to us, that net revenue from operation will be taken as net credit sales. I repeat, total sales दिया हुआ है, cash कितना है, कुछ नहीं बताया. So in that case, we simply need to assume that the total sales itself is a credit sales. And sales return भी नहीं दिया तो वही समझना है कि वही हमारा जो total sale है, that itself is a net revenue from operations. Next, ये भी important है, provision for doubtful debts. Now we are always in a mindset कि current ratio में provision for doubtful debt was to be deducted from debtors. किया था हमने, ठीक है, as well as short term provisions also. But as far as this ratio is concerned, the debtors turnover ratio या फिर trade receivables turnover ratio, provision is never deducted from debtors. Correct? Why so? Because the main objective is to know about the number of days for which the sales are tied up, rather than to know the realizable value from debtors. वहाँ पर current assets था, तो इसीलिए we used to deduct कि हमारे पास current asset कितना है वो देखना है. Correct? But यहाँ पर ऐसा नहीं है. We just want to have the turnover ratio, so that's why we are not going to deduct this provision for doubtful debts over here. What is the significance? Why do we calculate this? The ratio explains the speed with which the amount is collected from receivables, the trade receivables. Again, the same thing, like जितना ज़्यादा होगा उतना ज़्यादा अच्छा है. It reveals the efficiency of the collection department of the enterprise. A high ratio is considered better, right? As it will mean quick collection from the accounts receivables. Average collection period. As we were having the stock turnover ratio में like stock holding period, right? Holding period था तो वैसे ही यहाँ पर average collection period. तो formula also remains same. Working days in a year or months in a year to be divided by debtors turnover ratio या फिर trade receivables turnover ratio. Average collection period, it indicates the days within which the accounts receivable are converted into cash. By comparing the average collection period of current year with the previous year, we can assess the efficiency of the management in collecting the payment from debtors and bill receivable. Next is creditors turnover ratio. Just the same as like what are things we have discussed about the debtors, all those things are applicable to creditors turnover ratio. The only change is instead of sales, we will have purchase over here. Creditors turnover ratio or trade payable turnover ratio is equal to net credit purchases. instead of sales it is purchases. And upon average accounts payable, over there it was trade receivables, over here it will be trade payables. Average payables formula is very simple, that's opening plus closing to be divided by 2. But then again, you please remember, when you talk about the payables, trade payables, we know very well that creditors and bills payable are the two terms included, whether it is opening or closing. Average payment period, as we were having average collection period in debtors, same way over here it is average payment period. The formula remains same, that is working days in a year to be divided by creditors turnover ratio. What is the significance of this ratio? A higher creditors turnover ratio signifies that creditors are paid quickly, right? It increases the credit worthiness of the firm. The more quick you make the payment to the creditors, yes, it is always be a benefit to the enterprise, the firm, okay, and yes, it will really increase the credit worthiness, the reputation of the firm in the market. Next, working capital turnover ratio. The formula for this is working capital turnover ratio is equal to net sales. This has to be taken care of, okay? This is based on sales upon net working capital. Net working capital is, that is current assets minus current liabilities. The ratio points out how effectively the working capital has been used for generating sales. Working capital, the formula is very simple, that is current assets minus current liabilities. Working capital, another formula, okay, so this is net capital employed and minus net fixed assets. If sales is not given, in that case it can be calculated on the basis of cost of goods sold as well, okay. What is the significance of this? The higher working capital turnover ratio is considered good. चारों के चारों turnover ratios में, the higher the ratio, it is good for the company. It is better than the stock turnover ratio. Okay, working capital, current asset वाला point आ जाता है इसमें again. Why so? Because it points out the efficiency of the entire working capital rather than the efficiency of stock alone. Correct? That's all for the formulas for the turnover ratios. Fine. From the given information, calculate trade receivables turnover ratio and average collection period as well. Okay, so let us start writing the formula first of all. Trade receivables turnover ratio. Trade receivables turnover ratio. Okay, the formula is net credit revenue from operations upon average trade receivables. Okay. Now let us read the question. Total revenue from operation is given 5,20,000. Cash revenue from operation is 60% of credit. Okay. Closing debtors is 80. Opening is 3/4 of closing. So वो average तो बन जाएगा. But how to get credit revenue from operations? Okay, cash is something of credit. Let us assume the credit revenue from operations. Let credit revenue from operations be 100. Okay. Cash revenue from operations is 60% of credit. So 100 assume कि तो 100 का 60% is 60. So total revenue from operations in terms of percentage, right? That will be 160. And now this is very simple then. The cross multiplication total is given to us as 160 and the amount of total revenue can be seen as 5,20,000. And as per the need of the question, I need to have credit revenue from operation, that's 100. So 160 is 520, 100 is how much? Okay, so we can calculate the credit revenue from operations. So let me write over here, credit revenue from operations will be equal to 5,20,000, okay, into 100 by 160, 3,25,000. Okay, now we have credit revenue from operation with us. Let us calculate the opening and the closing debtors. Closing debtors is given to us. Let me write opening over here. Opening debtors is 3/4 of closing. Closing is 80,000. So 80,000 का 3/4 करेंगे. So 80,000 into 3/4. How much will that be?
60,000.
60,000. Okay. Now we have opening, we have closing, so we can definitely calculate the average debtors or average trade receivables, right? I'm not writing the formula. Opening plus closing divided by 2. Opening calculated is 60,000. Let me place it in the formula. 60,000 plus closing is 80,000 to be divided by 2. So this is going to be 1,40,000 to be divided by 2. The answer will be 70,000. Correct. Average is there. Credit is there with me. I can calculate the debtors turnover ratio or trade receivables turnover ratio. Okay, that is equal to 3,25,000 to be divided by 70,000. Yes.
4.642 times.
4.642 times. Okay, fine. Next is now I need to calculate that average collection period also. Average collection period. Average collection period. Formula is?
So number of days in a year divided by trade receivables turnover ratio.
365 to be divided by 4.64.
78.62.
78.62. So we can write it as 79 days. That's all. Okay, continuing ahead now. Next sum is compute the opening and the closing debtors. Okay, opening and closing debtors. Cost of revenue from operations, gross profit ratio is given to us. Very interesting. Trade receivables turnover ratio, cash revenue from operations, and opening debtors were 2/3 of closing debtors. Yes, how to start the sum?
Sir, we can find the revenue from operations with the help of gross profit ratio and cost of revenue from operation.
That's very good. Now, gross profit is 20%. Nothing has been mentioned over here, whether it is on cost or whether it is on sales. So what is the assumption over here? This gross profit is 20% on?
Sir, sales.
Sales, always sales, right? कुछ पता नहीं है तो always on sales. Gross profit on sales is 20%. Okay. So we need to assume something over here. Let sales, right, be 100. Okay. Profit is 20. So COGS.
The cost of revenue from operation will be 80.
80. Very good. Now, like, because we have sales, profit, and COGS, and we have COGS with us, cost of revenue from operation, 4 lakh is there with us, right? So we need to calculate sales. Sales will be equal to 4 lakh.
100 by 80.
Yes, into 100 by 80. Okay. So this will be 5 lakh rupees, right? Okay. We have sales with us. Cash revenue from operation is 60. So I need to know that credit revenue from operations. Okay, so that will be equal to total sales, right, minus cash sales. Okay. Let us place the value. So net credit revenue from operations will be equal to total sales calculated as 5 lakh rupees and minus cash is 60,000. Okay, so difference is 4,40,000. Right. Okay. After this, credit sales so again we need to have average. So trade receivables turnover ratio is given to us. So let us apply the values in that formula. Trade receivables turnover ratio. Okay, so this will be equal to net credit revenue from operations, okay, to be divided by average trade receivables. Okay, if I just place the values now, trade receivables turnover ratio is given to me as 5 times, that is equal to net credit revenue from operations, that has come to 4,40,000. Okay, and this has to be divided by average trade receivables, which is not there with us. Average trade receivables, right? So average trade receivables will be equal to 4,40,000 to be divided by 5.
88,000.
88,000 is right. Now to calculate this opening and closing datas, opening is something of closing. So what I need to assume over here?
So we will assume closing daters to be X and opening will be 2X by 3.
That's very correct. Let the closing datas be X and opening is 2/3 of closing. So opening datas will be equal to 2 by 3x. Okay, now we all know that average is opening plus closing divided by 2. I have average trade receivables with me, so let me apply the formula first of all. Okay, so average trade receivables, okay, is equal to opening trade receivables plus closing trade receivables to be divided by 2. Okay. So let us apply the values over here. Average was calculated as 88,000. Okay, so 88,000, that will be equal to 2 by 3x is opening plus closing is x to be divided by 2.
Then sir, we will multiply 88,000 into 2 and
88 into
is equal
2,
to
okay. 88 into 2, that's fine. What else then is equal to what?
5x upon 3.
Okay, 5 by 3x. Okay, correct. Now 88 into 2 is 176. Okay, that is equal to 5 by 3x. Okay, fine. So what is the value of x now? What should I write?
176,000 divided by into 3 by 5.
Into 3 divided by 5. Yes. Now I want you to give me the value, please.
1,05,600.
1,05,600. Okay. So this is what is x, and x was assumed as closing daters. Okay, that will be equal to 1,05,600. Opening is 2/3 of closing, right? So 2 by 3, and into closing is 1,05,600.
70,400.
70,400. Thank you so much. So we are done with the sum. Okay, next sum is very much similar to the sum that we have done for debtors. It is now creditors. Calculate the trade payables turnover ratio and average payment period. Total purchases is given. Cash purchase is 20% of credit. Closing is 60% of opening, and which are 10% of total. Every information is given. We just need to apply it, execute it, and get the answers step by step.
So the first step will be so we will take credit purchase as 100 and cash purchase as 20.
Let the credit purchase be 100, okay, and cash purchases is 20. Okay, so total purchases will be
120.
okay, that's 120. Fine. Now what?
So we will find out the credit purchase by using 8,25,000 into 100 upon 120.
8,25,000 into
100 upon 120.
100 by 120. Yes,
6,87,500.
687,500. Okay, so we have credit purchases with us. Opening creditors is 10% of total purchases. 10% of total purchases. Yes, beta. Now you tell me to place the values over here. Opening creditors. Yes, beta.
So it will be 10 by 100 up into 8,25,000, which will be 82,500.
5,000 into 10 by 100. Yes, that's correct. That is 82,500. Okay. Now closing is 60% of opening. Closing creditors is 60% of opening.
So it will be 82,500 into 60 by 100.
82,500 into 60 by 100. Okay.
49,500.
49,500 is right. Now we have opening, we have closing with us, so we will be able to calculate the average trade payables, right? Average trade payables, we all know the value, like the formula is well known to us, that's opening plus closing to be divided by 2. Opening has come to rupees 82,500, closing is 49,500 to be divided by 2. 8250 is 132 to be divided by 2, that should be 66. Okay, now finally we can calculate trade payables turnover ratio, right? The answer, like the credit purchases was 687,500 to be divided by 66,000.
10.41 times.
10.41
times.
times. Okay, thank you, Bacha. We have trade payables turnover ratio with us. Now we need to calculate average payment period. Okay, so this is number of days in a year upon trade payables turnover ratio. Yes, let us apply the values and get the answer. Average payment period, okay, is equal to number of days in a year is 365 to be divided by trade payables turnover ratio is 10.41 times
35 days.
35.
5.
Okay, let me take it as 35 days. So I'm done with this particular sum as well. Now this is working capital turnover ratio. The first thing I would like to know the formula. What is the formula for working capital turnover ratio?
Sir, it is net sales upon net working capital.
That's very correct. Working capital turnover ratio is equal to net sales, that is net revenue from operations upon net working capital. Okay, fine. Cash is available, credit is available, revenue from operations, return is there, liquid asset is there, inventory is there, current liability is there. Okay, so first thing I would like to know the net sales. Okay, net revenue from operations. As per the information given, what formula I'm supposed to apply over here?
So cash sales plus credit sales minus revenue from operation return.
I'm writing in very short over there, cash plus credit minus returns. Okay. So I'm sure like you will please manage like and understand that like it's cash revenue from operations plus credit revenue from operations minus revenue from operations return to get the net revenue from operations. Okay. So let us place the values over here. Cash is rupees 1,30,000, credit is 3,60,000, and to be deducted is the returns. Returns is 10,000, right? Yes. What is the net amount, please?
4,80,000.
4,80,000. That's correct. Okay. Now we have net revenue from operations with us. That's numerator is there. Now for denominator, we need to have the working capital, and working capital, the formula is well known to us. That's current assets minus current liabilities. Now we have current liabilities with us. We can see that it's 130, but current asset is not there with us. So how to find current assets?
So liquid assets plus inventory.
Liquid assets plus inventory. That's very correct. Okay. So let us apply that formula. Current assets will be equal to liquid asset can be seen as rupees 1,50,000. Inventory can be seen as rupees 1 lakh. Okay. So the total is 2,50,000. Okay. Now current asset is there, current liability is there, so I'm ready to calculate the working capital. So working capital is equal to current asset is rupees 2,50,000, current liability is 1,30,000. Okay, if I deduct this, the remaining answer is 1,20,000. That's working capital. Now I have working capital with me, I have net sales with me. I can go with the working capital turnover ratio. Yes. Net sales was 4,80,000, right? To be divided by working capital, that's 1,20,000. Okay, so how much is the answer? 480 divided by 120. It's easy to calculate. That's 4 times. Done. We know. Let us read this question. Liquid ratio of a firm is 1.2. Current liabilities is 1 lakh 10. Stock is 80. The value of cost of revenue from operation is 3 lakh 50. And the gross profit is 20% above cost. Find the working capital turnover ratio and current ratio. What is the hint? Like, from where should I start the sum?
सर लिक्विड रेशियो दिया और करंट लाइबिलिटीज दिए, तो लिक्विड रेशियो का फॉर्मूला डाल के हम लिक्विड एसेट्स निकाल लेंगे.
That's correct. Okay, so liquid assets upon current liabilities. Okay, done. Let us place the values over here. So liquid ratio is 1.2. Okay, ratio 1 hoga.
1 is
Okay. Liquid assets are not there with us. Upon current liabilities is 1,10,000. Okay, so yes, liquid assets will be equal to
1,32,000.
into 1.2. 132. Okay. Stock is 80,000. Liquid asset is there with us.
फिर लिक्विड एसेट्स में स्टॉक ऐड करेंगे तो हमको करंट एसेट्स मिल जाएंगे.
Okay, wait there. Liquid assets plus inventory. Okay, let us place these values. Okay, liquid asset is 132,000 and stock can be seen as 80,000. So 132 plus 80 is, I think, 212. ठीक है. Current asset आ गया, current liability है हमारे पास. Okay, so we can calculate the current ratio over here at least. Let us complete that. Okay, so current ratio is equal to current assets upon current liabilities. So let us place the values. Current ratio is equal to current asset is 2,12,000 to be divided by current liabilities is 1,10,000. 212 divided by 110. 1.93. ठीक है. 1.93 ratio 1. Current ratio आ गया. Now what? We need to calculate the working capital turnover ratio as well. How are we going to do that?
Sir, working capital could be found out by subtracting current asset with current liability.
Okay. So let us place the values then. So working capital is equal to current asset is 212 and minus 110. Okay, so what is the difference?
1,02,000.
Okay, 1,02,000 is working capital with us. That's fine. What is the formula for working capital turnover ratio?
So it would be net revenue from operations divided by working capital.
Net revenue from operations to be divided by net working capital. Fine. Okay, now what is the next step? Working capital is there with us, 1,02,000. I can see that. But what about revenue from operations?
Yes, sir. We will find out by gross profit above cost 20%. So we will take 3,50,000 into 20 upon 100, which will give us 70,000.
Very good, very good. अब cost दिया हुआ है. Cost is 3,50,000. Gross profit is 20% above cost. So cost का ही है ना. Cost is already there with us. So let us calculate the gross profit. Okay, gross profit.
Yes, sir. It's 3,50,000 into 20 upon 100.
Into 20 upon 100. Yes, that's very correct. This will be 70,000.
70,000.
Okay. Now we have COGS with us. We have gross profit with us. So it is easy for us to calculate.
Yes, sir. 3,50,000 plus 70,000.
Revenue from
4,20,000.
operations. Yes. Okay, so that is equal to cost of revenue from operations, right, plus gross profit. Okay. Okay, so revenue from operations will be equal to COGS was
3,50,000
3,50,000
plus 70,000.
70,000. So total is 4,20,000.
4,20,000.
ठीक है. We have revenue from operations. We have working capital with us, so it is easy for us to calculate the working capital turnover ratio, right? that is equal to 4,20,000 to be divided by working capital 1,02,000, 4.11 times. Great.